Now, the sanctions already in place against Russia are starting to bite, and hard. Moscow is warning that inflation could hit 23% this year, and the economy is expected to sink into recession as well. For ordinary Russians, the international assault on their country's finances has become plain to see.
The clearest sign of American and European sanctions against Russia can be found in the shopping centres, where the storefronts of many Western companies are closed. The popular US fast food chain McDonald's is completely pulling out of Russia after nearly 30 years in the country. Others such as Pepsi, Starbucks and IKEA have also shut down their operations, with no plans to return in the foreseeable future. Meanwhile, prices, especially for food, have risen enormously, but the ruble exchange rate has staged a surprising recovery. At the start of the war, the value of the ruble plummeted dramatically, but intervention by Russia's central bank allowed the exchange rate to stabilize again, making the ruble now stronger than at any point in the past 5 years. The central bank was initially unable to cushion the fall in the exchange rate. Its foreign currency reserves stored abroad were blocked. But the state quickly forced Russian companies to exchange 80% of their foreign exchange earnings into rubles, helping to stabilize the exchange rate. Besides, the export of oil and gas continues to bring hundreds of millions in foreign currency daily to Moscow.
Now, those sanctions are taking effect. The damage has fallen short of the total economic collapse that some had predicted for Russia. I asked Vasily Astrov from the Vienna Institute for International Economic Studies why that was.
The collapse takes time. The thing is that the full impact of Western sanctions has not been felt yet. Normally, you would expect the immediate impact from financial sanctions, but these are precisely the sanctions for which Russia was reasonably well prepared. Russia is much less well prepared for trade sanctions, which are more of a long-term nature, and the full impact of those trade sanctions is yet to come. I expect in the course of this year, third quarter, fourth quarter of this year, this is the time where the full impact of trade sanctions will be fully felt.
And what is that impact actually going to look like, and how is it going to feel for Russians experiencing that impact?
I expect, first of all, big drop in industrial production. The thing is that the import embargoes, export embargoes, there are a lot of them, and they will contribute to a collapse of value chains, collapse of production of many goods. We already see the impact in the car industry, for instance, that the car industry is running out of parts and components, and the car production has already declined by 70% in Russia. And there will be a similar effect in many other industries. Many Russian industries are crucially dependent on the imports of Western inputs and equipment. So once this Western equipment doesn't come, it will be much more difficult for the Russian economy to operate. It will take time, maybe a few years, until alternative suppliers are found and until Russia manages to produce many of these goods itself or with own parts and components.
But in the meantime, the Russian government can point to certain signs that suggest that the sanctions aren't having that big an impact. I mean, you can look at the value of the ruble, which is actually higher than it was before the invasion of Ukraine, and also Russia continues to be able to service its foreign debts. How much can we rely on those as signifiers of the impact of the sanctions, though?
Well, there are two reasons for the strength of the Russian ruble. One is the wide-ranging capital controls which have been imposed by the Russian central bank. This has been a very competent response. And of course, these measures, these drastic measures, they have been helpful in keeping foreign exchange within Russia. So this is one factor which has supported the value of the Russian ruble. And another factor, which is also very important, that is the collapse in imports. So I've already mentioned these trade sanctions. They have already led to a collapse in imports. So there are data, for instance, there is statistics, mirror statistics, which suggests that, for instance, imports from Germany declined by 60%. Imports from the United States declined by even more than 60%. So that means that actually there is much less money, much less foreign currency needed to buy imports. And that is also the reason why the demand for foreign currency is not very strong, at least from this point of view. And this is also a factor which is supporting the value of the Russian ruble.
Okay, so it all remains to be seen really what impact the sanctions are going to have, but Russians can expect things to get worse, can't they? Vasily Astrov from the Vienna Institute for International Economic Studies, thank you very much for joining us.
You're welcome.